Hey, what's up, guys? A little bit different setup today. Watching some college football, sitting on the couch, relaxing. Didn't feel like going into the office to record a standard webinar, but you're looking at some things here. I wanted to show you about I don't want to call it traditional, but a way for you to invest um, in in your future um, without having to do it on your own. So what we're going to do here is we're going to basically go to Titan. Just simple Google it. You can also get the app on your Android or Apple device. But Titan Invest. Click on this here. Of course, this is going to take you to this screen. I always recommend before you get involved with anything, of course, read it. Don't just simply sign up for something that you're not aware of what you're getting yourself into. But I've been using Titan for a while, and I'm going to have a link for you. It's going to have some benefits. This is what I was talking about, where I'm getting basically, I think it's like 5.7% on my cash. You could just basically store your cash right here in this account, let it earn the interest, and transfer it to your bank. Now, I will forewarn, it's not like an instant transfer, so it does take some time. But as long as you plan accordingly, there's no money to keep your. I mean, it makes no sense to keep your money in a bank that you're earning very little interest. But they have the cash management program. They have a managed finance program, where basically they have these different portfolios that you can sign up for, and it of course tells you what's in them, and it breaks it down. What percentage. They have the flagship. Um, let's go into that for a second. Their website's very informative. Goes over all this stuff. Take some time to review it. This is what they do. They do the research, so that you don't have to do it. Of course, they monitor the market so you don't have to, and you don't have to think about timing the market. Everybody tries to time the market. Buy low, sell high, and vice versa. I'll tell you, from an investor, um, unless you're on it constantly, it's virtually impossible. You might get lucky every once in a while, but so that's the Titan flagship, and then down here they have the like the Arc. I don't know if you're familiar with Kathy Wood, but she's heavily basically has an index fund, I guess if you want to call it. For people aren't aware, her company invests millions, billions of dollars into specific companies and buys up a whole bunch of shares of stock of those companies, and then you buy into her, I guess if you want to call it, for lack of better terms, portfolio. Then you have Carlisle Credit. So this is basically a credit. You can invest in credit. So you can research all this. Then you have the managed stocks, so which is the flagship, the opportunities. So this will be like the top companies that are performing the best in the broad market. Annualized return, so 10%. So whatever you basically invest $100,000, you get yourself 10 grand, right? Of course, and that's as of August 31. So this is from the inception. This is just of this fund that they have. This is just one of their funds. It goes down here, talks about. So there's the inception date right there. So if you invested 100,000 on that date, in 5 years, you would have basically got yourself $10,000. and likely more because there are some dividends and stuff like that that I'm sure that they invest in stocks and have dividends. And then it tells you right here. So this is what their advisory fee is. So much cheaper than a standard broker. Standard broker, like you're gonna go, normally around 1%. I guess it's not much cheaper. But the thing that's nice about this is a lot of it's instant, right? So, you say you want to get out of something, you sell it. Now, on their end, they're going to have to, of course, sell off your positions just as it would with your broker. But you're not simply making a phone call to your broker, having them wait to call you back. You just simply go onto the app and say you want to get out. Down here it tells you about their holdings. You can see all that. Here's the people who basically manage this portfolio. Goes over disclosures. Let's go. Let's move my picture around here for a second. Let's go to here. So you got your index investing. Let's just look at that. This is newer for them, but you can actually look at what they have here. So there are automated stocks and bond strategies. So they're also using AI. As much as I hate it, it is very important in certain aspects of life, but I do think it's going to really destruct things. This tells you all about how it autopilots everything. The auto bonds, basically what it will do is it'll just find the best bond rates for you, and it will automatically transfer you from one to the other. It's self-explanatory. With this, you can basically set your recurring deposits. Say you want to invest. Let's just go to all these for a second. Go to the investments again. So let's just go to a la carte. So this is what I'm talking about with my cash. I'm getting 5.3%, right? And that's cash. So have money in your bank, you transfer it over to the Titan Smart Cash, and you keep it in there, and then you pull out what you need. You don't want to be taking stuff out of here daily. This is not like a debit card or anything like that. This is something where you say, okay, this is the money that's sitting in my savings account in my bank. I'm going to put it in this smart cash. I'm going to let it grow at 5.3%. And if I ever need any money from it, I can simply just basically go into it that day, say how much you need to take out, then you need to transfer it to your bank, and then it's back into your bank account. Also, looks like your funds are FDI insured. I don't know if that really means anything. I don't trust a simple thing that's going on with the banking system in our country at this point in time. 1-2 banks go out, fantastic. You might be FDI insured, but I'm still hearing reports of people with Silicon Valley that still haven't got their money. I don't know what that means, but that's kind of scary, right? It happened, 4 months ago, 5 months ago? Imagine being out $100,000 that's in your bank account just sitting there. And I'm not saying that this can't happen here. It can. I don't think anything's safe at this point in time. I do think that the only really safe thing, is cash. But with cash, greenbacks, you're not getting any interest on that. You're not earning anything. If it's just sitting underneath the mattress, it's not earning anything. But on the flip side, you're also not losing anything in the event something were to ever occur. I'm not saying it's going to occur, but I'm also not saying that it can't not occur. All right, but so this is the a la carte. So you basically have options to the Titan Treasury, which basically they're gonna invest in what are known as like T-bills, okay, where you get the 5.3%, cash reserves 3.2. We went over the index investing already. That's basically where they're just investing for you in certain indexes that are across the broad market. Then you have the automated stocks, you have the automated bonds, You have your managed stocks, which are here's the portfolio. So we went over the flagship. You went over opportunities. So those basically opportunities would be up and coming companies, right? That are really cheap right now. That the managers of this company feel that are best. Let's just take a look at it quick. You'll notice that the annualized return is about 2 points lower than what it was with the flagship. There's a reason for that, because there is more risk involved with investing in startup companies. I know this firsthand, as I've actually invested through, means of regulation. It sounds stupid now. Regulation A, possibly. I forget. I haven't invested like this in over 3 years, but I bought shares of a company that wasn't even a publicly traded company, and that money got locked up. And one of the companies that I invested in actually ended up getting sold to another company, but they declared bankruptcy beforehand. And even though, the shareholders would have been liable to get some of that money back, the board members got it first. I got this big thing in the mail. But what I'm saying is that there is some risk with these, but these companies right here, whoops, let's go back here. These companies here are actually publicly traded companies. These aren't non-publicly traded companies. So you got your flagship, you got your opportunities. Come on, let's go here. What is it? Oh, I didn't go down. So it's telling you it's going to invest in stocks. You can withdraw from this daily. Here's your advisory fees again. So if you're investing $100,000 a year, let's just take it with your standard broker. Say they're charging you 1%. If you're investing over $100,000 a year, and they're charging you 0.70, you're going to end up saving what, $3,000 roughly. So hey, it's something, right? Here's the companies that they go over. You'll notice a lot of people probably never even heard of many of these companies. I mean, I'm sure you heard of Five Below. But this right here is the opportunities portfolio. And what I'm getting at is that you can put money in flagship, you can put money in opportunities, offshore is as simple as it is. You're gonna invest basically in developing markets. So such as China, such as, companies in India, Brazil, stuff like that. You'll notice here that minus 11.81%. So you would have lost money with this. Let's just see what some of these companies are. I don't know why Visa is in there, but it is. So look at like Canadian Railway, Mercado Libre. These are all basically offshore companies. Suncor Energy, iShares Japan, the ETF. So you're seeing that there. Let's go back. Then down here, you got your alternatives. So like I said, you can invest in private credit. We can invest in this right here, but we'll go into the credit. That's more basically of a safe investment, 4.27%. You're not going to really fluctuate all that much. That's more of a safer investment for people who are maybe a little bit older that can't be as risk tolerant. Let's go here. It tells you all about investing in the credit. You're also going to basically, get distributions with that. So let me read that quick. So let's get out of there. There's the fees again. Let's go back here. You can invest in real estate, which is nice. I said you can invest in the ARK, the venture capitalist. You can invest in cryptocurrency. Now, cryptocurrency is down, but let me just explain this to you. The inception date was 2021. If this was, from say 2018 to 2023, that number would not look like that. Even though, let's just take Bitcoin for example. I bought Bitcoin at 14,000. I know a lot of people that own it a lot cheaper than that. But I bought Bitcoin. I bought Ethereum at $400. I know people that own it a lot cheaper than that. But Bitcoin was up to 69,000, and Ethereum was up to 4,000. They're now, of course, down. Respectively, Bitcoin is around the 30K. Ethereum is around like 1,600. But like anything, there's a little bit of risk in this. Simply, you're seeing that right there. But let's see what they got here. So they are just in Bitcoin and Ethereum right now. When I first got involved with Titan like 2 years ago, they also were doing a little bit of altcoins. I believe they had Cardano and some other things. If you know the cryptocurrency market, you know what I'm talking about. If you don't, then you got to learn about it, because there is plenty of opportunity in crypto, and you're going to see it go up again too. There's the smart money. But basically, one thing we didn't go over here was the real estate. Let's go here. I got to learn more in the app, and I don't want to go to my app right now and open it up, because if I do, you're going to see my account numbers and all that good stuff. So we're not going to do that. What I'm going to do is I'm going to put you on the right road so that you could get out of the traditional ways of investing, get your money out of the bank. Always keep a little bit of money in the bank, but my suggestion to anyone who wants to invest is have yourself a very diversified portfolio. You want to have stocks, bonds, you want to have cryptocurrency, you want to have precious metals, gold, silver, and all that. You want to have yourself, very importantly, if you really want to invest in yourself and you just have extra cash laying around, a whole life policy. Okay, purchase a whole life. You overfund it. You could then use that as a bank. You could borrow against that policy if you ever need it for, say, a real estate investment transaction. The good part about that is that you overfund it. Say you overfund it the first time, and say you have extra capital as the years go on to keep putting into it. You're just going to keep borrowing against that, and really, if you never have to really like pay it back per se. What you're going to do is you're just going to get charged interest on the money that you borrow against. So for example, I have one, and I think we have like a $2 million death benefit on it, right? And we pay normally $7,000 a year to keep that active. So as long as you're paying your minimum, you're keeping it active. Now, we overfunded it, and I took money out of it to purchase a property that I owned. And the interest that we're paying now is like $1,800. So coming up here in October, I will have to pay the $700 or $7,000 plus the interest that was earned on that. Now, you could pay it back if you want, but a lot of stuff happened over the past 2 years with, I said, if you watch another video that I had wonderful capital gains in 2021. I had horrible capital gains in 2022 simply because of what happened to cryptocurrency. I'm heavily invested in cryptocurrency, as I believe that it is the future to an extent. But you could have yourself a diversified portfolio. If you have capital, people who are just building capital, this is going to be all new to you. But what my hope is that you are using the, I don't want to necessarily say skills. I'm trying to show you through how I trade to give you an idea. Everyone's going to have to develop their own trading, let's call it strategy. Like, you're not going to be able to do what I do, and I'm not going to be able to do what you do. So if I was to teach you how to trade and just basically just learn my strategy, that might not work for you. So what you got to do is you got to learn the basics of trading first, learn about the different strategies, backtest those strategies to see how they work, find out which ones best work for your trading style. You might be a scalper. You might be a long-term, well, I don't want to call it long-term holder, but if you're day trading, you might be interested in just holding it for the day to see what happens. You might not want to get in and get out of X amount of trades. But the best investment advice I can give an up-and-comer, young kid, maybe in college or 20s, 30s, is take this serious, because if I took it serious 20 years ago, I'd be in a lot better position than what I'm in right now. I'm in a good position now, but I'd be in a much better position. I really didn't start taking investing serious until I hit probably 25, 30. And it's got real serious over the past 5 years. But the best thing to do is have yourself as I said, different engines in case one engine isn't working. You can just go have yourself different cars, right? Think of investing as cars. Oh, one car's low on gas. Well, this car's filled up. We're going to use this car today. That's the same way that the investment should be. Oh, cryptocurrency isn't doing so good this year. Well, what we're going to do is we're going to take some money of our crypto portfolio, and we're going to put it into our, let's call it here, our flagship, That's what investing is all about. There is no right or wrong answer. The bottom line is that you do it. Okay? So this is Titan. This is who I use. I'm going to present you guys with the link if you're interested in learning more about it. You just sign up directly through that link. Everything that you need to know could be found on the actual website. And as I said, you can either log into the desktop version or you can download the app right to your phone. I just hope that what I'm trying to preach to you is going to resonate over time. As you see time go on here, and as you see your money starting to make money, that gets exciting. Because basically what you're doing is you're just sitting in the back and looking at your broker account here, and you're going, oh, well, hey, yeah, I made $20,000 last month. I didn't even do anything for it. Or hey, I made $2,000. Or hey, I made $200. Well, it's better than just sitting in a standard bank account where it's not doing anything. Probably charging you more to do some kind of transaction or bill pay or something of that nature that you're not even aware of, than it is just basically making money into a standard checking or savings account. All right, guys, it's Saturday. I've taken up enough of your time. Thanks for viewing. This is Steve with the Breakout Project. Remember, we all got 24. Choose and use wisely. We'll see you.